Okay, traders. Yes, welcome to Awesome Forex, and it is another weekend. We have analysis as usual, and mainly it is on gold and USDCAD. So we already had the analysis on gold. So if you have not maybe watched that video on gold, you can watch it. Here we're going to analyze USDCAD. We're going to have analysis on USDCAD. Now, but before doing anything, remember here is our homepage where you can visit those major areas, major links, major buttons. So you can click those buttons here. For those who are using computers, you can click those buttons. The first one is for broker, LITEFOREX. The second one is for TICKMILL, broker. Then we have links or buttons to our social media. We have Facebook, Instagram, and Telegram. So you can do that before doing anything else. For those who are using phones, you can find those links on the video descriptions. You can visit the video descriptions site and then find those major links. So now, welcome again to weekend analysis. This is weekend to weekend analysis, and here is the USDCAD, and I'm in a weekly time frame, so we can have overview of what is going on USDCAD, what is the overall direction, and then we are going to see in detail in lower time frames. So now the overview is we are looking for a long-term upward movement. We are looking for a long-term upward movement in USDCAD, and this is on a weekly basis. But see now analyzing this in detail, we can see a proper direction for next week. Now the target is to understand an exact direction for the coming week, but the overall direction for a long term, we expect to have a long upward movement. So now in weekly time frame, we cannot have many things maybe to discuss here, but in relation to the last week analysis, I explained about those two candles here, two bullish candles here, but always they were like doji, or the spinning bottoms. They were the spinning bottoms. So mainly I said these are now always they stand as the fourth wave. They stand as the fourth wave, which means it was a sideways movement. Now price always was moving in a sideways, and generally this constituted the fourth wave. So basically we were expecting that the fourth wave was complete now on last weekend. Always we were expecting that the fourth wave was complete. So our major observation was movement to the downside. Now it was a sell. Now our major direction was sell in this week, but always the market didn't have that long-term sell as we expected. Now it kept on moving to the upside. Now we're going to see what is that upward movement. What's that upward movement for the whole week? Now this is a bullish candle for the weekly basis. So we're going to see what was this upward move in relation to what we expected last week. So now moving to lower time frames, now we're going to daily time frame. We can have a detailed view of the market, whereby last week we had this trend line. We had this trend line or channel. Mainly I incorporate price action things like trend lines. We have support and resistance, and then finally I will count waves. Now having relation from those analysis, mainly technical, price action and wave counts, will have confluence on a specific direction of the market for the coming week. So now always we had this trend line, and mainly the last candle was this one, the bearish candle, which was in between. Actually it was in between this trend line. It was closed actually half upside and half was down this trend line. So usually we didn't have a specific direction that the market was maybe broken this trend line, so expecting that it will be strongly moving to the upside or it will be strongly moving to the downside based on technical analysis. But based on wave counts, we were expecting a very short move to the upside, and this was correction. Now this short move to the upside was correction, but now wonderfully enough, the market moved strongly to the upside. Therefore it changed our perspective for this movement of the market to the upside, whereby we had something like combination of corrective structures. This was like combination of the corrective structures, whereby the first corrective structure didn't meet that price target for this correction. So combination usually have a purpose of meeting price target, so it kept on moving to the upside for the purpose of meeting a particular price target for this correction. So now, if that was the case, you'll find that we had now within those 5 days of the week, now within those 5 days of the week, all of them, they were just in the upside. All of the movement to the downside were correction. Therefore, the overall movement was to the upside now, which was opposite to what we were expecting. Mainly, we were looking for a strong sell. Actually, we were looking for a very strong sell in the completion of the fifth wave to the downside, but market kept on moving to the upside, but the movement to the upside was not such strong. Therefore, this showed that this was just a correction. Due to that a very difficult movement to the upside, this shows that this was correction. So if it was correction in lower time frames, we can have a detailed understanding on what type of correction was taking place here, what type of correction was happening. Always this is seen clearly in lower time frames, and what's going to happen also will be clear in lower time frames. But in the daily time frame, what we can see here, based on price action things like we have this always this was support. Now I mean this was broken support. Now previously was a support, now it was broken and retested, then price moved below it. Now it is touching it for the very first time. Now since it was broken, now it is touching again for a very long time. It is touching again for a very long time. It was away from it. So now when it touches this, what we expect from this area is market may be rejected from this resistance. Now it is a resistance, so market will be rejected from this resistance, and also this rejection that we expect here correlates with what has happened with this trend line. Also, it correlates with what has happened with this trend line, whereby this trend line always price hit it or touched it several times. It touched it several times, and finally it successfully broken. Now it successfully broken it, and it is just within this week. It was on Monday. Now on Monday, price successfully broken this trend line, and our Monday candle, a daily candle, always closed over it. So now breaking to the upside always is something that has never happened recently, because it was rejected several times. So now if it has successfully broken it, and also there is no retest, it broken it straight, now keeping on moving to the upside, so there was no any retest around this area. So now what we expect now, this movement to the upside, a movement that I'm talking about here, that price is going to be rejected to the downside. Now this movement also relates with the idea that market will move to the downside to retest this broken trend line. Market will move to the downside to retest this broken trend line. But now we'll have a clear picture once we incorporate things like wave counts. But mainly what I'm talking here is basically based on technical analysis. It is mainly based on trend lines and support and resistance. So now let's see a 4 hours time frame. Let us see a 4 hours time frame. Now in a 4 hours time frame, you can find that we can have a detailed view of the market. Now we can see a detailed structure of the market, whereby we had this first move. We had this first move to the upside, and mainly when we were analyzing last weekend, we were around this trend line. Now the price was around this area, whereby we had this bearish candle, and also the trend line is also straight within this candle. It passed it straight through this candle, this bearish candle. So now what we were expecting always this upward movement, we expected that this upward movement was correction of this strong sell. We had a very strong bearish candle here, so we expected that this ABC, now this movement to the upside, was correcting this bearish candle, which always we expected it to be the first wave move to the downside. Then this was the second, so we were looking for the third wave. We were looking for the third wave to the downside in completion of the fifth wave. So market did different, it kept on moving to the upside, so our perspectives changed. Now our perspective changed, whereby this first move was just a beginning of correction, so the second move to the upside was combination. Now this was combination, a second structure was added to the previous corrective structure, so we have two corrective structures combined to have a complete correction in the fourth wave. Therefore we label this as the fourth wave. So completion of this fourth wave, always it gives us a view of the market to the downside. Now our view of the market is to see the market moving to the downside, and this movement to the downside always is an impasse. It can be now an impasse or diagonal. It can be anything between impasse or diagonal. Now why it should be an impasse or diagonal? Because this is the fifth wave. Now this movement to the downside now will be the fifth wave. It will be the fifth wave to the downside. So a fifth wave can take a form of an impasse or a form of a diagonal. So what we expect to happen here is we will have a 5 wave to the downside, which can take a form of impasse or a form of diagonal, and this will be in completion of the fifth wave. This will be in completion of the fifth wave of wave C, in completion of the fifth wave of wave C. But later I will provide a clear picture of what is also expected, because we must have alternative counts, mainly based on wave counts. We must have alternative counts, so also I will provide an alternative for what we must expect for the coming week. Now mainly we can concentrate on what has already started happening to the downside here, because the market was already completed the 5 wave move to the upside. Now we expect this 5 wave move to the upside is completed now, and also we can have candlestick patterns here. We can find that now this bearish candle now to a certain extent has engulfed this bullish previous bullish candle. So if maybe that thing has happened at this area, so it provides a clue or a confluence for the downward movement of the market. And also the price has already touched this upper channel. The price has already touched this upper channel. Also this is another confluence for the downward movement starting from this area, and also it has touched this resistance, so it is also another thing. So we have several factors or several reasons for the market to turn from this area straight to the downside. Now looking in a hourly time frame, to have a detailed structure of the market in this downward movement. Now I have already labeled the 1, 2, 3, 4, 5 to the downside. I have already labeled the 1, 2, 3, 4, 5 to the downside. Now what I expect here is, now always what I see here is the market has started a movement to the downside. The market has started a movement to the downside, and this downward movement has taken a form of leading diagonal. It has taken a form of leading diagonal. So what I see here is a leading diagonal. What I see here is a leading diagonal moving to the downside. Now this leading diagonal has already completed the first wave, and also it have the second, also the third wave, and the fourth. So 1, 2, 3, 4 have already completed. So what we have to expect here, we will have a fifth wave. Now we are very specific. Now we are very specific to what is going to happen in the coming week. We are very specific now to what is going to happen in the coming week. So now what we have to expect next week is price will start with a downward movement. Price will start with a downward movement in completion of the fifth wave to the downside. We'll start with a downward movement in completion of the fifth wave to the downside. Then after completing the fifth wave to the downside, now this will be in completion of the first wave. Now this will be wave 1 of the fifth wave of wave C to the downside. So now after having this fifth wave movement to the downside, now this will be followed by correction. This will be followed by correction that may take a form of an ABC, that may take a form of an ABC, but depth of correction may depend, always depth of correction may depend on which form of corrective, which structure will be taken by this corrective pattern here. Now this corrective pattern can take any structure, can be zigzag, can be diagonal, and mainly can be flat also, but we don't have triangles on the second wave, so it may take any form but not triangle, any form of corrective structure but not triangle. So after having this ABC, maybe it may be an ABC to the upside correction, so we expect a very strong sell. Now we will expect a very strong sell. So now what I can say here is, once we have completion of the fifth wave to the downside, once we have completion of the fifth wave to the downside, we have to concentrate on the structure, the specific structure or the specific appearance of this upward movement. If we will find that this upward movement has taken a form of corrective wave, if this upward movement will take a form of corrective wave, now we have to watch for confirmations for sell around this area. We have to watch for confirmations for sells around this area, and also it will be a very strong sell. It will be a very strong sell because this will be in the third wave of the fifth wave. So how far this is going to move, how far or how deep this is going to move to the downside, always our first targets, now our first targets must be in this support area. We have this support here, so our first targets must be at this support area, because the fifth wave can be truncated sometimes. A fifth wave can be truncated. Truncation is when the fifth wave do not move beyond the level where the third wave was ended now. So if this will not move now, if this will not move beyond the level where the third wave was moved, so this will be truncation, and it is possible for the market to turn around this area. It is possible for the market to turn around this support area. So if it will turn around this area, we will label now a fifth wave here. We label this area as the fifth wave, and now we'll be looking for the upward movement. But now those events cannot take place, not all of the events may take place next week. Always what we have to expect an upward move, and probably we can have a very short move to the downside as a beginning of this impulsive move to the upside. So this is a detailed analysis for USDCAD. But remember, price also may move beyond this support. Also it may move beyond this support, whereby it can go deep. It can go deep to retest this trend line. It can go deep to retest this trend line, a broken trend line here, because it was not retested. So it may go deep to retest this. So if it will break this support, we have to watch it moving to hit this now to the area where it will touch this. It will touch this trend line. After touching this trend line, we have to watch for buy trades. But mainly those trades those opportunities will not occur in the coming week. In the coming week, our concentration will be very short. We have to watch for this sell, then we have to watch for correction to the upside, and then we have to watch for other sell opportunities after completion of correction. So now this is an overview of the market for the coming week, and always it somehow correlates with what we expect on gold, because on now in gold we expect to have a strong move to the upside. We expect to have a very strong move to the upside, but that move to the upside, it will start, or it will begin with the correction to the downside. So when gold will be correcting to the downside, USDCAD will be correcting to the upside, because they have negative correlation. they have negative correlation. So we expect when gold will be correcting to the downside, USDCAD will be correcting to the upside. Now when gold will start moving to the upside in continuation of the trend, now USDCAD will be moving to the downside in continuation of its trend, or in completion of its trend to the downside. So those things actually adds confluence. The idea of negative correlation between USDCAD and gold, also it adds confluence on the direction of the market in USDCAD for the coming week. So thank you for your time. Remember to like this video, you have to share it also, and make sure that you put your comment. If you have any opinions, make sure that you put your comments there, and also make sure that you subscribe this channel if you have not subscribed. So thank you for your time, and welcome again to Awesome Forex.